afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Ken Shreve here with a breakdown of the action in today's session. And it was a little bit of a repeat from Wednesday's session with a very disappointing finish, Ken.
Yeah, no doubt. We get these strong opens. A Nasdaq composite was up 2%. I think the Russell 2000 was up almost 2.5% today. But we just had a wave of selling come into the market again. And we often say this is a hallmark of a market in correction. You know, where you get these strong opens and weak closes. So it was more of the same. There's just a lot of carnage in the stock market. New leaders are going to come out, but it's going to just take a little while for that to happen. So just sitting on the sidelines, sitting in a cash position makes the most sense at this point.
And maybe sounding like a broken record, but we still have to continue to build our watch lists to see what's holding up, what groups are sort of resisting this big correction at this point, and to see when there is an uptrend. Those are the stocks that might be ripe for starting to wade back in. But anyway, what are some of the watch list stocks that we'll be taking a look at today, Ken?
Well, on IBD Live, we've been talking a lot about the strength in shipping stocks, Zimmer, Zim integrated shipping services in particular, but we'll take a look at Matson today, MATX, which came out with very bullish Q4 preliminary Q4 results. We'll also take a look at another consumer staple stock set to report earnings next week, Colgate Palmolive, CL, and finally Williams Companies integrated oil and gas stock.
Yeah, that's exactly right. Yeah, energy sector continuing to be at the front of our radar. Well, first, let's take a look at the major indexes. The Nasdaq today closing down 1.3%, so reversing lower in a big way here. We had the S&P 500 down 1.1%, the Dow down about 0.9%, and the Russell 2000 down about 1.5%. So more bleeding here, continuing to come closer to that 14,000 level. And will this 14,200 area be where we start putting the brakes on things?
Well, we'll see. Hopefully that level will hold. Certainly, the 14,000 round number is another level. So what we know right now is that institutions are still dumping stock here, and it's just you got to be real careful in a market like this. Again, the Nasdaq was up 2% today, and it closes sharply lower. So. When the market tide is flowing negative, it's not the time to be trying to make money in stocks. When the Nasdaq was up sharply today, we're looking for, maybe some stocks to add on a leaderboard and just looking for some actionable setups. And there's just really nothing out there at all, whether it's in the technology sector, a lot of extended oil and gas stocks. So the screens are still really dry, but at some point they're gonna start teeming with prospects again, but that's not going to happen until the market finds its footing and we start to see renewed signs of accumulation.
And even if the market does start finding its footing tomorrow, there are indications that we are at oversold levels. That doesn't mean that investors should bank on that and feel like they're falling on safety there. If you haven't been selling yet, definitely if you're down on positions 7 to 8% or even less, Ken, or even if you have small profits, do you think at this point it's not even worth sitting in stocks that you have small single digit percent gains in, and it's just better to sit on the sidelines at this point and take what you can get if you are up?
Yeah, I mean, exactly. I was holding on to a few names headed into today. Even on Leaderboard, we cut loose with the KRE, the regional banking ETF. Our loss was only about 2%, so we took a very tiny loss. But we just looked at KRE and said this is a stock not acting right after a recent breakout. You can see 3 declines, not only 3 declines with closes near lows, but 3 declines in heavier and heavier volume. So we took a very small loss here and felt good about doing it. I mean, it could try to find support at the 50-day moving average, but taking small losses and any marginal gains in stocks, if you have them, seems like good strategy.
Right. Let's take a look at the S&P 500 and Dow before we move on to those individual names. So the S&P here underneath, I think that 4,500 level at the close. Yep, down about 1.1% to finish the day. So it's now near its lows from early December and headed towards its 200-day.
Yeah, and I think a trip to the 200-day moving average for the S&P 500 is going to be a pullback of about 10% off its high. You have to remember, like really, really bad bear markets. I mean, we can go 15, 20% off highs, if not more. I mean, I've seen, bull and bear markets since the late 90s, and a typical bear market is defined by a 20% pullback. So we're not even at 10% yet for the S&P 500, but we'll see if the 200-day moving average can hold. I will see that with the violence, the violent nature of the selling, we could have more to go on the downside here. And what we know right now is that the screens are just empty with prospects, and that's our clue to just be patient and wait for the selling to run its course, and we'll get new opportunities in due time.
Exactly. It's good to have that cup half full perspective, which can be hard to do in conditions like this when, there are a lot of growth stocks out there that have gotten slaughtered, but you have to keep your mind focused on when that new uptrend does occur. And it's easier to do that if you're sitting on the sidelines and not in that battle, taking all the bullets while all this damage is occurring.
Yeah, I mean, you just say you really have to avoid the temptation. I mean, even today, when the markets were up big, there were stocks moving. There were stocks showing explosive percentage gains, and it's very difficult to keep your powder dry. That takes a lot of practice and just having the discipline to stay in cash when the market is telling you to stay in cash. So you have to avoid the temptation of buying stocks, and if you're going to do it during a market correction, you really have to keep those losses small. It doesn't make any sense to wait for 7 to 8% loss. You'll know right away if a stock is going to work or not. So cutting losses at 2 to 3% is good strategy.
Yeah, it is. And an interesting development here today with QQQ, which tracks the NASDAQ 100, joining the NASDAQ composite below its own 200-day line as well. And let's also take a look at blue chips. So here's the Dow below its 200-day line, Ken.
Yeah, well, you talked about a market that is starting to look a little bit oversold, so we could see a bounce for the Dow and the other major stock indexes, especially for the Dow. It could try to bounce off the 200-day moving average here, but again, just one day of strength. Even if we had closed near highs today and ended with gains of 1.5 to 2%, the first day of a rally attempt, you really don't want to pay attention to the first few days of a rally because there's probably a lot of short covering going on. People that are short the market, they cover their short position. That causes some buying demand. So you want to wait. It takes more than just 1 or 2 days of rallies to confirm a new uptrend.
Yeah, great reminder there, Ken. All right, let's talk about some stocks. So MATX is Matson in that transportation shipping theme. So gapping up today, closing off of its highs, but still up almost 7% and some heavy volume behind the move. So maybe, Ken, this was one of the ones that was fueling that temptation today that you were talking about.
Oh, absolutely, because it was really vying for a breakout over this handle that it formed over the past couple of weeks. But the broad market pulled it down. But fundamentals look very good in the shipping group. These ocean transportation logistics firms like Matson, they came out and they released preliminary Q4 numbers, and they were supposed to earn $5.37 a share. Now they're thinking they're going to earn between 8.70 and 9.10. So volumes out of China are very strong, seeing good growth there. Fundamentals remain pretty strong in this group overall, but this is just a very risky environment to be trying to make money in stocks. And if you had bought Matson early in the day, you're probably sitting on a pretty decent loss right now.
Yeah, that's right. Okay, well, now let's take a look at Colgate Palmolive, ticker CL, consumer staples name. Did dip down almost 1% today. It's got earnings next week, but all in all, Ken, This is a stock that is holding up fairly well over the last couple of weeks after a pretty big move off of its late November, early December lows.
Yeah, I think the consumer staple story is still a pretty good one. Yesterday on the video, we talked about Procter and Gamble, which had a great earnings report and a positive reaction. So I'll be interested. We'll be watching Colgate Palmolive next week, along with Kimberly-Clark, KMB, another stock. But Colgate Palmolive, I just like how it moved back up through the 200-day moving average. There was good volume as it was rising, and it's pulled back a little bit, but still wouldn't be surprised to see a strong earnings report next week from CL. And yeah, glad you went to the weekly chart, because it's a nice little setup here. And if consumer staples stocks continue to attract buyers and the numbers are good from Colgate next week, could see a legitimate breakout here.
Right. And those super growth stocks that we're typically attracted to in healthy markets, their weekly charts look a little different, Ken. But this is a theme that we are seeing really come into play here. So perhaps looking for a short-term gain, if you really did feel compelled to have to do something, if it reacted positively on earnings, this might be an area to try to dip a toe in the water, do you think?
Well, I mean, it seems like a sort of almost like a safe haven area of the market. You tend to stocks in the consumer staple stocks tend to sell at relatively low valuations. You're not looking at stocks selling at 50, 60, 70 times trailing earnings. There's a consistent demand for these consumer products, and some cases you get a dividend. So anyway, yeah, this consumer staples is seems like a pretty good safe haven. Could still work, and we'll see what Colgate's numbers look like next week.
Okay, and let's take a quick trip to the oil and gas sector, an integrated name here. Group number 6 out of 197, Williams Companies, WMB, could be working on a handle here after retaking its 50-day not all too long ago.
Yeah, again, good accumulation as the stock worked its way higher towards the 30 level. Lots of heavy volume gains right there. So that's what you want to see as the right side of a base forms. And now it's drifting lower. Not much volume in the stock today to the downside. So still watching Williams Companies. This is a company that stores and transports natural gas, but it is near the top of a cup base here, and another stock in the energy sector, another area of the market where money is clearly flowing. So this is a good name to watch.
Yep. Well, another one for the watch list. Thank you, Ken, as always, for such fantastic analysis. We really appreciate it. And everyone, be sure you're tuning in tomorrow morning to IBD Live, where the conversation continues. We're going to update you on the latest in terms of the overall market action, as well as stocks that remain on our watch list, and maybe a further discussion of sell rules as well. We'll have to see what the day brings, but always looking forward to seeing you all there. And we love the interactions with you all. So we hope you join us, investors.com/IBD Live. We'll see you there tomorrow morning and right back here after the close.